along expected lines. That's the biggest consensus. Some were hoping that it's going to be a 50 bips cut, but 25 bips.
True, but if you look at the commentary of Fed Chairman Powell, he was not so dovish in his commentary because he was still worried about inflation coming back. The projections are already about 2% for next year as well. So that's something which the street will be, taking note of. The biggest thing, watch out factor for the street was the kind of dovish commentary which the street was expecting, but that did not happen. It basically said that it is a risk management cut, and that means that labor market is soft, and that's why a cut is initiated. But going forward, it's going to be data driven and and it will be policy to policy. So while the street consensus is another 2 cuts, 25 basis point cuts coming in in calendar year 25. There could be one in 26 and one in 27 as of now, while the street was expecting 3 coming in 2026 calendar year. So that's something which is which will keep the market close, because you have a lot of data coming in before the next policy is there, and if labor continues to be weak, the Fed will continue to act, but its commentary is going to be very guarded and and closely watched out for.
Oh yeah, absolutely. In fact, let's just take stock of what the global market handover as well is looking like. Considering overnight, Fed did move and Fed did move along expected lines. To the US markets then firstly, and just marking slightly up when it comes to the stock futures, but the handover was pretty flattish, so to speak, for most major indexes. While the Russell 2000 did manage to eke out marginal bit of gains, the NASDAQ was a little bit soft. It was down about 0.3%. The Dow managed to, of course, hold up very steadily, about 0.5% in the green, but the S&P as well was quietish in trade. But this morning, Asia seems to be picking up a whole lot more. You've got 0.5% move coming in, no less, for Shanghai. That's up good 20 points. Hong Kong is higher by 100 points. And the Japanese Nikkei is almost closing in on a 500-point gain. That brings us to our markets, which already, after a fair amount of consolidation, seem to be picking up momentum. And yesterday, we did manage to close above the 25,300 print. And the underperformers, RIL, SBI, they were the ones which contributed.
So this leg of rally is been led by the front lines, and that's what we are seeing in the last 2 to 3 days, where a lot of buying is coming into front line stocks like RIL, L&T, SBI. PSU banks were active. If you look at September as a whole, roughly 3.7% jump in the Nifty in September alone, and that's the best performance in the last 5 years. I think from calendar year 20 onwards, this is the best performance for the Nifty, 3.7% in terms of the returns that it has given so far in this month there. The setup is also very important from a point of view of the F&O here, because 25,500 continues to be a resistance there. We're seeing a lot of call build-up happening in 25,500 and 26,000. So the run-up is not going to be as smooth as expected. While we have gone up to nearly 25, crossing the 25,300 mark, there will be some kind of resistance going as we go closer to 25,500. That's something which we're going to watch out for. Gains in PSU stocks is something which will be seen there. And defense also was one of in the index which was the most gainer yesterday. FIs continue to be net sellers. DI is positive positive buying nearly 2,300 crores. But the delivery is something which you need to look out for. In stock delivery, you had HDFC Bank, you had SBI, Kotak, and ICICI Bank. These 4 banking stocks saw a very high level of delivery coming in on Wednesday, and that's also sums up what's happening to the Nifty Bank futures, where we have seen some long positions being built up, and over the last 4 to 5 days, we have seen a short covering in that index, where where the index has lost open interest to the tune of nearly 200 to 300 crores there. But interesting, Aisha, Nifty futures open interest has come down by nearly 4,000 crores in the last 4 to 5 trading sessions, and that gives you an indication that the kind of short position that is getting covered there. And in the last 4 to 5 days, if you see the net long positions have been created in Nifty futures. So every day we are seeing a net long positions coming in, but open interest is falling down, which basically means the covering is happening for Nifty there. So resistance is there at 25,500 and 26,000, but that's something we need to watch out for. Index long positions have risen again to 13.2%. We were as low as 7.4% just a week back.
Yeah, and you can tell in the names that are actually beginning to scale up, right? I mean, look what's happening within the auto pack. Some of the underperformers, like we were talking about, and SBI held out by a solid 3% yesterday. Reliance, look what's happening on L&T in the past 2 trading sessions. And mind you, these are stocks which haven't quite participated in the move in the Nifty in the last 2 months. I mean, to think of it, it's been sporadically IT. It's been some of the staples names which actually have held out, and some of the other consumption names as well. So it's the underperforming basket, like Sajid was explaining right now, where there's some concentration of shorts. Now indicators are suggesting that they are beginning to cover themselves, and which is why you're seeing the move come by in L&T, SBI, Reliance, etc. They are the ones which are beginning to finally give that move or leg up to the index. But let's take it across to Snehi, find out what the global chatter has been overnight. Snehi?